euro, I'm placing an order to buy at 119.91 too. So order placed. If you're looking to buy euro, you enter it right now. The price is 119.91.
Transport. All that has led to auto and electronic makers to boost their chip buying. And that is the Bloomberg Business Flash. Francine.
Into it right now.
Thank you so much, Ritika. Now, the Bank of England prepares to release its latest rate decision, along with a report that considers pushing borrowing costs below zero. Well, back with us is Adam Posen, Peterson Institute president, and a long time ago, far away, also involved with FTC and Bank of England. Adam, thank you so much for staying with us. When you look at actually what's happening in the markets, it's mind-boggling. So just at a time, now the Bank of England is incorporating, I guess, the negative rate scenario in its toolbox. The markets are discounting it. So they say, yeah, they're talking it, but they go there. How do you see this dynamic of FTC and Bank of England? Adam, thank you so much for staying with us. When you look at actually what's happening,
I think the Bank of England has a genuinely awkward position. They've got very noisy data, but I think they have to focus on the fundamentals. Fundamental one, Brexit is as bad as I have human beings said. It's not just teething pain. Fundamental number two, by some miracle, vaccine distribution and late lockdown has been working position well. They've got very noisy. Fundamental number three, but I think they have.
Position opened, long position on euro at 119.91.2, just right here. Okay, hold on, guys.
And that will put a negative pressure on the pound, which they frankly want. And then probably by May they will implement it when it turns out that the
hold on, guys.
Thank God, public health recovery from the virus is overtaken by the Brexit problems persisting.
Adam, every time we speak to the Bank of England Governor, Andrew Bailey, and he has been very generous with his time for Bloomberg TV, you know, there's the debate on when the optimum time of actually implementing negative rates is, right? So what point in the cycle is it a better idea? Is it right when the recovery starts taking place, or then is that too late?
It's not too late. I don't think, but it is dependent on what you think the outlook is more than 2 years out. And it is dependent on what other factors are driving the recovery. If in the UK case, the recovery is just an immediate relief rally on the disease, then that, like the disease itself, God willing, is temporary. And you have to look through that. I think in the end, the UK, remember, despite recent data, it has the highest deaths per capita in the G7, has the slowest recovery in the G7. They're going to have to move, I think.
Adam Posen, you have the advantage of Olivier Blanchard at the Peterson Institute. He and a guy named Summers are known for the chronic long-term effect of unemployment. Are we in the vicinity of true hysteresis coming out of this pandemic?
I think, as Olivier would admit, the evidence since their brilliant paper in the mid-'80s characterizing what really was going on in Europe and what was really going to happen later in the U.S. is become more mixed in the sense that, yes, there is hysteresis, but the scarring doesn't seem as permanent as we once thought. You can see that in the return to high labor force participation rates in not just the U.S., but in Europe following the financial crisis. So it's more like an accelerator than a one-way door.
Interesting.
But I think Olivier's point, and again, I shouldn't speak for him, he'd be glad to talk with you, but I think the point to take away from Olivier is similar to what Chair Powell and the Fed is talking about, and now Secretary Yellen is talking about, which is that there is a real cost to letting potential growth persist, and some of those costs are long-lasting, and they're felt by the people at the fringes of the labor market, and so there's a reason to emphasize a hot economy that pulls people back into employment.
Adam, what is the effect of the stimulus misapplied to the people that desperately need it? It's a fact and a fear of conservative America that government spends money, and maybe that's a good idea, but they don't apply it with a vigor, with an acuity to those that really need the funds. Are we going to do that with the next tranche of stimulus?
We're going to do that with a small piece of the next tranche of stimulus, but people should keep this in some amount of perspective, given all the amounts of corporate spending that often doesn't get a high return either. If you look at the package that was passed nearly a year ago in March, April of last year, you look at the package that was passed in December, and you look at the bulk of the Biden administration proposal now, it is going to the people that need it. And in fact, the proposal on the table now, they won't say it this way, but I don't look at most of it as stimulus. It's working the problem. It's funding vaccine rollout. It's making sure state and local governments don't have to contract basic services. It is providing long-term unemployment. It is doing things that are really about the suffering and the dysfunction coming from the pandemic. Then you get into where these stimulus checks, do you need them to everybody? And the answer is, I pick up on another conservative theme, which is one I agree with. You know, you do a lot of means testing, you get very intrusive nanny government that creates a lot of resentment and a lot of distortions and a lot of gaming. So it's better to just say, okay, we're going to cut off the disbursement of checks at this income and not get into people's business and not try to incentivize them in very intrusive ways. I think that's better, and it's less waste in implementation. So then comes the question, should the cutoff be 100,000, 75,000? That's where the debate should be. And that would, at the margin, probably save some money that doesn't need to go out. But it's not a big deal. It's not socialism. It's not some huge misstep.
Adam, thank you. Adam Posen, the Peterson Institute president, joining us on a number of things. The Bank of England and, of course, what's happening with Treasuries. Bank of England actually just minutes away from releasing their rate decision. Tom, if you round up exactly what we're expecting from the Bank of England, no real change in interest rates, no actually real change also in bond buying program. What we are expecting is a possible downgrade of the near-term forecast for the economy. So I know Tom Keene and his gang will be all over this. More Bloomberg surveillance ahead, this time simulcast on radio and TV. This is Bloomberg.
That was either illegal or caused disruption. And this was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Of excess credit, liquidity, and boundless enthusiasm, there will be many bubbles forming in markets.
The system is, from a financial stability perspective, still is robust.
We haven't seen signals that these trades will spark any systemic risk.
The world doesn't shift just because you're buying shares online.
Markets are rewarding places with vaccination and normalization strategies.
There are a lot of people who can't go back to work.
The virus dictated the downturn, and it will dictate the pace and the shape of the recovery.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Equity futures unchanged this Thursday morning at about 90 minutes time, initial jobless claims. But Tom Keene, we have to start with a monster milestone that we've hit in the last 24 hours. Worldwide, more people vaccinated than confirmed cases. Real progress.
And there's real progress. And what I love about it, John, I've mentioned this a number of times, in America, it's incremental. It's the day after day of it, even with a snowstorm in the East Coast and the disruption. You see it in the newspapers, all keeping that bar chart of the percent of the public 1 dose and the percent of the public 2 doses. We're way behind on 2 doses. I'm John, like in 8 days or 9 days. My people have that date.
Okay.
But, the first dose, it's building up, as you say, every day.
Relative outperformance in the United States versus Europe. How do you push that through this market? Tom Keene, euro dollar, a break of 120. Yes. We've been talking about it for the last week, the last couple of weeks. There it is on the screen, 119.90 on my terminal, Tom, down about 0.4%.
I've got the chart by my podium here. I'm not going to show it today. But, John, what I am going to say is we've seen 4 standard deviations on euro, a little misleading, from +2 all the way down to -2 standard deviations. Weak euro is a real path.
I can't wait to see that chart a little bit later, Tom.
We'll try
really
to get
excited about that. Thank you. Lisa, one of the consensus trades of 21, just starting to crack a bit.
The idea of the dollar weakening versus the rest of the currencies, and this does come with the vaccination schedules that you're talking about. Although the UK is doing all right with their vaccination schedule, and we did just get that Bank of England rate decision. At 8 a.m., we're going to be hearing from Governor Andrew Bailey. Really interested to hear what he has to say about the negative rate debate going on in the United Kingdom. John, I know you've been following this. The idea that they are willing to deploy them, the market is pricing them in, and yet the economy will pick up inevitably as those vaccines get in people's arms. 8:30 a.m., this is the big number, in my opinion. U.S. initial jobless claims following another really underrated number yesterday, John, and that was the ISM services data, which came out the strongest since February, unexpectedly so. The idea, people actually coming into the labor market in greater numbers than people had previously expected, even in services, even amid a worsening pandemic. And also later today, Janet Yellen, Treasury Secretary, meeting with the Fed and SEC heads on recent market volatility, talking GameStop, AMC. The question is, what can they do? Was there any law broken? Was there anything violated? How much are they going to look into manipulation by Reddit users that possibly are bots or not necessarily representing themselves in accurate ways? And it'll be interesting to see what the messaging is, if nothing else, John.
This is great, but, John, I don't know. She was going later in the day, and I didn't really care what Secretary Yellen's doing. John, 3 p.m., Tots Chelsea.
Oh, there we go.
See which season is blown up.
Nice. I look forward to that. Do you know what number of the morning is, though? Not related to football. 700,000. They're the fees Secretary Yellen received from Citadel, Tom.
Yeah, I thought I saw a bigger number.
Let's not brush
than
this
that.
to one side. This is important.
Okay.
Does Secretary Yellen need to step aside and let someone else lead this? I think those questions will be asked repeatedly.
That's a different question. Yeah, I can understand the idea she should recuse herself from this. That's an interesting question. No question about that.
So we get to the price action of the morning.
Please,
Equity futures unchanged on the session, briefly in negative territory, now positive, slightly up a point on the S&P 500. Euro dollar, there's your break at 120. Euro dollar down to 119.92. We're off by 0.4%. That's a stronger dollar. But if you get to euro sterling now 88 pence. Got to move there in sterling's favour as well, Tom. A lot of vaccine trades starting to come through, I think, in more prominent ways. The UK is ahead of Europe. The United States is ahead of Europe, and that euro story is breaking down. Coming into 21, Tom, I heard 130. People looking for that euro move to the moon. The ECB not being able to do anything about it. That story's changed and changed quickly.
You know, I know you've taken the real yield to 90 minutes tomorrow. You see it in the yield space. I know you'll mention that, John, but I think in the data check, you also got to mention the earnings persistency we're seeing.
Yes, Tom, but also a reality check as well from some of the cyclical parts of this market, from this economy. Did you hear what American Airlines had to say?
No, I missed
in the last 24 hours. More job cuts could be coming. The demand explosion or return of demand that they thought would happen in the summer, that's getting pushed back. And we talked about Mr. O'Leary over at Ryanair in Europe. I remember hearing from him 3 months ago on Bloomberg TV, Tom. And Mr. O'Leary of Ryanair was talking about the beaches being packed in the summer in Europe. Does anyone think the beaches will still be packed this summer in Europe? A lot of this is getting pushed away. So we've got this really interesting dynamic taking place at the moment, Tom.
Yeah.
We've got this vaccine progress, tremendous progress in parts of the Middle East, Israel, the UAE, in the United States, in the UK, and then far behind is Europe as well. So you've got to think about this. The sequencing of reopening, has that shifted, Tom? Has it changed? Do we allow consumers to re-engage with the domestic economy but keep travel shut down through the remainder of 2021? So if you put in on that cyclical trade, what changes? What's changed in the last couple of months?
You know, I think it is a shift, and it's cross currents as well. You see it in Bank of England with their reduced GDP forecast just out seconds ago. I mean, it is a lot of cross currents.
Down to 5% for 2021 versus the forecast back in November of 7.25%. They're the forecast coming out of the Bank of England. On the Bank of England itself, unchanged on the asset purchase programme, unchanged on rates as well. Joining us now is Andrew Slimman, Morgan Stanley Investment Management Senior Portfolio Manager. Andrew, there's a difference between valuations growing and growing into your valuation. What are you expecting later this year?
Well, I think the big surprise here is just the magnitude of earnings beats by these big companies. And when you have the 1, 2, and 3 largest companies in the S&P beating, and you're seeing consensus for the year going up 7, 8%, that means the PE that everyone thought was so elevated is not as elevated as expected. So my experience is, maybe the stocks were hot going into earnings season, but you don't want to sell stocks that have that magnitude when you have beat, and that's a very bullish sign. I think that's why the market really hasn't taken any pullbacks this month yet, because of these beats. It's a very powerful. You don't want to sell stocks when their fundamentals are delivering at that magnitude. So I think that's a very that falls into the ledger of one of the pluses for the market later into the year.
Andrew, are we forecasting out or extrapolating out later in the year, or are we really going through an exercise of 2022?
Yeah, I mean that's a great point. My thesis is still that you got to be careful on companies that really benefited from shutdown, because their year-over-year comps are going to get tougher next year. And so I think that's my thesis is the market is going to do well until optimism about vaccines, COVID getting behind us builds. It's going to come at a time when earning year-over-year comps for a lot of these companies are going to be tougher in 2022. So I think the market's going to struggle at some point this year, but I think it's too early right now because the numbers are still coming through.
Andrew, when you say the market, are you talking about big tech?
Yeah, I mean, I think that's one of the areas, but it's not just big tech. I think there's a lot of areas of the market. I mean, look, what's interesting is, John mentioned the economic data is coming in very strong. And normally the returns of the market, when you get this strength of the data, starts to regress lower because the Fed gets involved and the Fed starts to, temper or taper. And I don't think they are right now. So that's something that we have to balance, is the cyclical impulse is still there, and usually it starts to wane at this point. I'm not sure it will.
So I agree with you, Andrew, that the shift in the Fed's reaction function actually gets more powerful as this recovery really starts to take hold, because they've told us they won't do anything. They won't step in on the rate side of things as things pick up, Andrew.
This is supremely important. I don't think people are focused enough on this. The Fed has done, I like to say the anti-Volcker pivot, right? They are saying they're going to let the economy run hot. I think this is why a lot of these cyclical areas of the market, including the banks, have a lot longer runway here than what's normal when the Fed steps in and, takes the punch bowl away. They're not going to this time. So I think the cyclical trade will continue to work here.
And Andrew, what's so interesting here is I don't hear anybody saying all boats rising. Remember that phrase? John and Lisa are too young to remember it. But the idea, forget about all these shifts and rotations, that we just get all boats rising. Is that feasible?
Well, yeah, but, there's certain areas of the market that are not rising, like the defensive stocks, consumer staples, utilities. All those areas are not rising. So that's risk off. And so I'm not sure it's all boat rising, but yeah, I think it's a pretty good scenario. But I agree with you, Tom. I think later this year, when we start to focus on year-over-year comps for next year, that's when it's going to get tougher for the market.
Andrew, great to catch up. Andrew Sliman there of Morgan Stanley Investment Management. Lisa, how does it feel to be too young? The burden of youth. Just the burden.
I mean, the burden is real. Let me tell you.
How is it?
Heavy
so many emails. Oh,
Tom,
my word.
It's so difficult.
Yeah, let me tell you, especially when you go ice skating and then don't go to the doctor.
Coming in the morning, just carrying that burden of youth.
You were so medicated yesterday, Lisa. For those of you on radio, the cast is larger than it was yesterday.
Yeah, that's right. It's amazing, the medication, what it does to my abilities to look at bonds. I will say, just following up on what you were talking about, John, with respect to the reaction function of the Federal Reserve. Thank you.
Good. Don't hurt yourself when you pivot.
It's almost like I do this for a living. I was looking at the gap between 30-year and 5-year Treasury yields, and this yield curve actually widened out to the most since 2016. And basically, there is a question in markets: how much of this is an expectation of the U.S. selling that much more debt? How much is this an expectation of inflation? And this is a huge issue. If you take a look at the chart over a longer period of time, you'll really see that trajectory accelerating up, John, and it raises a lot of questions.
I was going to talk about this later. I agree with you, and it's because the data has got better over the last week.
The burden of youth, Tom.
Lisa mentioned the ISM a little bit earlier this morning, Tom. Let's just sit there just for a moment. The employment component in that was really decent. So we've had that. We've had the ADP. We'll get claims in about an hour and 20 minutes. And what have we seen the estimate do? You noticed it yesterday. Started to creep higher ahead of payrolls Friday.
50, 70,
basically
100.
doubled, Tom. Now it's 100K. Positive 100K. I don't think 100K is good. I don't think it's enough. I don't think it gets it done. Nobody believes that. But the trajectory, the change of direction is better, Tom.
10 seconds, and this is good that Lisa does this. Folks, the media does not spend enough time looking at two yields, a spread market versus a single point glory.
We will do 530s a little bit later.
530s.
I promise. 530s
Michael Darda wants us to do the 10s, 30s.
Okay, we can do that too. From New York City for our audience worldwide, seen on Bloomberg TV, heard on Bloomberg Radio. From New York to Boston to DC and San Francisco, and on SiriusXM Channel 119. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden is vowing that he will not retreat on sending out $1,400 checks as part of a stimulus package. The president told House Democrats he is willing to tighten the eligibility for the payments. Republicans have suggested making the checks smaller and sending them to fewer people. House Republicans have voted to keep Wyoming Representative Liz Cheney in her leadership role. They turned back an effort to remove her for voting to impeach Donald Trump. Meanwhile, House Democrats are preparing to oust Georgia Representative Marjorie Taylor Greene from 2 committees for her incendiary statements. House Republican leader Kevin McCarthy said he would take no action to punish her. It's the latest sign that the Federal Reserve is not close to scaling back its massive bond purchases. Fed officials played down the economic impact of recent stock market volatility. Chicago Fed President Charles Evans says he doesn't see the market swings as a link to macroeconomic borrowing costs for businesses or households. And officials say the UK has now passed the peak of the latest wave of the coronavirus pandemic. The country's chief medical officer says there's a downward slope of cases, hospitalizations and deaths. Meanwhile, 10 million people in the UK have been vaccinated. That is about 15% of the population. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
I think, we're in a good spot right now with monetary policy. And, they're talking in the government about more fiscal policy. We really probably need that support to get us through till we get the vaccines well distributed.
We're in a good place. Right on script there from Loretta Mester, Cleveland Fed president. That is the script of the Federal Reserve right now. Policy is in a good place. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's the price action this Thursday morning as we count you down to an important initial jobless claims report a little bit later this morning. Futures up just. We add some weight to the S&P 500 by around about 0.1%. We advance about 4 points in the bond market, unchanged on a 10-year, 1.1427%, as Lisa Lisa points out, 5s, 30s, the widest spread between those two, the steepest curve on that basis, going all the way back to 2016. Elsewhere in the FX market, we have a break of 120 on euro dollar. We've been looking for that. There it is, euro dollar, Tom, 119.90, coming in about 0.4%.
Some real dynamics here, and I should notice sterling railing off the Bank of England, comments there on negative rates and such. Right now in Washington, Kevin Cirilli, our chief Washington correspondent. Kevin, what's the gap between the liberals and the moderates of the majority Democratic Party?
They don't want to compromise. Yesterday I said, I'm coming back to work today to one of my sources, and I said, what's going on with the stimulus plan? And really the daylight amongst progressives and centrists right now is huge. And as a result of that, the Senate this week is likely going to pass what the House did the other day with regards to the $1.9 trillion stimulus. But it's anyone's guess, really, if this is going to be able to pass, not just with the Republicans and Democrats, but because of that daylight that you have between the far left and the middle.
Well, I would suggest, Kevin, that so many of us are unused to where we are with Democrat structure in Washington. What is the process that they go through? Do they compromise? Is somebody put in the timeout chair? Is Joe Manchin the head of it all? I mean, what's the process you expect to see?
Well, in terms of the $1,400 stimulus checks, I think you're already seeing a little bit of the Democrats' leverage in terms of they want to lower the number of American households that qualify for there to be $1,400 stimulus checks. That's something that the far left does not like. I spoke with one liberal who told me essentially that there are already rumblings that they're deeply disappointed in terms of how some of the more centrist members of President Biden's administrations have been willing to cave on that, and that could set up a lot of tension in the Democratic Party for the next couple of years.
Can you have speed if you need to compromise, Kevin?
No. There's the speed here and really any working timetable, Jonathan, for when this is likely going to be passed, especially if they want to go through the process that they're trying to get it through, is likely, if not at the end of this month, in early to mid-March.
Meanwhile, not only is there dissonance between the left, far left, and the Democratic Party and the more centrist members, but within the Republican Party, there's a showdown that's been going on over GOP Representative Marjorie Taylor Greene, and we have McCarthy coming out saying that she's extreme, trying to remove her from certain committees. We also have Mitch McConnell saying the same, trying to paint her as an outlier. How much support does she have with the rank and file Republicans?
None. When I talk to members about her specifically, if they are willing to engage on the conversation of it, they are saying privately right now they don't like what she has done for the Republican Party at all. She's really boxed herself in terms of where she can grow in terms of her support. That said, many of the Republicans that I've spoken with would prefer that the process in her district, the constituents who elected her, that they be the ones to decide if that's the representative that is best for their district.
I mean, Kevin, I know in your sabbatical you did a staycation at the Trump Hotel. There were a few rooms available. But other than that, Kevin, when you look at the new Washington, what's it feel like?
I read Matthew McConaughey's Green Lights. I finally finished the book. And here's some gossip, Tom. Here's some gossip. People in this town want to know if McConaughey is going to run for office. He's been making the rounds on all of these shows. And everyone's saying, is Matthew McConaughey going to run for office in Texas? I wonder what Ted Cruz thinks about that.
What kind of politician is the gentleman actor?
Well, I think it would be he makes a really fascinating pitch for how to talk to the suburbs. I'll give him that.
This show got too serious for too long, didn't it? 20 minutes in.
Did you guys miss me?
Yeah,
my buddy Carl in the control room forgot my name. Okay, Lisa's in a cast. Tom Brady's back in the Super Bowl. I mean, what's going on here?
These things go together.
Do you want a final word on the Super Bowl, Kevin? Do you want a final word on that?
Besides the Eagles aren't in it?
I never thought I'd say this. I'm rooting for Andy Reid again. He used to be our coach, so.
Okay, inform our audience which flavor he's on.
Who's Andy Reid?
You're asking me?
The Chiefs.
The Chiefs. That's Mahomes, right?
Mahomes, yeah. That's
the golden voice of radio, Michael Barr. I just walked past Michael Barr earlier this morning and just said, Mahomes or Brady? And he just said Mahomes.
Yeah.
And that was it. Bottom line, Mahomes. I don't know.
You'll be on the right side of history.
Yeah, Kevin Sorelli, great to see you.
Good to see you, Kevin. Thank you.
Thank you.
Thank you. I don't think we gave him a hard time at all.
No, we didn't. I
think on for a month.
You know.
The hard time you gave me. Kevin goes away
he
for
was
a
gone
month,
for
and we
6
promo his
weeks.
show.
You know, he
Sound
was
on
gone for
weekdays,
6
5
weeks.
p.m. Eastern.
Oh, really?
On Bloomberg Radio.
After the real yield.
That's true. Are you my lead-up, my warm-up act again this Friday?
I am so
Are you doing that again? That went really well. I heard the ratings were a little bit better, so I appreciate that.
Well,
Will you come back again on Friday?
I talked to Weston yesterday. He said never again.
I don't blame him. Let's get to the price action this morning. Futures are up a little bit, up about 5 points on the S&P 500. We advanced about 0.1%. But I think the one story talking to a lot of you out there this morning, financial markets, cross-asset worldwide, the stories in the FX market. Some pronounced dollar strength. It's broad-based. It's through G10. But what gets your attention is euro-dollar. It is a clean break of 120 at 119.84. And Tom, you mentioned it a couple of days ago that already one of the big calls for 21 on February 4th, it's breaking down early on in the year. Now, I'm not saying this is going to be the move for the rest of the year, just some cracks in a consensus trade quite early on in 21.
Well, the blended, the Bloomberg Dollar Index, which has got a more EM feel and it looks differently than the larger DXY. But again, these are 4 standard deviation wrong moves from, in the case of DXY, from a huge -2 all the way up through the center tendency to a positive 2. These are wrong moves for the weak dollar crew.
We're talking of foreign exchange, the Bank of England doing what you all seem to love and have learned to love over the last 6 months. They're still talking about negative rates.
Why?
Don't know. They will work on a tiered system in case rates get cut below zero, but they do not intend to send a signal that negative rates are coming. I think sterling gets it. Cable 136.46 unchanged on the session. Sterling's been stronger against the euro as well. I think sterling gets it because most people are looking at the rollout of vaccinations in the UK and saying, we don't think the UK or the Bank of England will need to do more.
Okay, well, to explain the culture here, because we would never get those headlines out of the American Central Bank. Why are they so verbose about this?
I think they're talking it up, Tom, because they find the idea of talking it up to be stimulative. I don't know if anyone actually believes that negative rates will work outside of the ECB or the S&P for that matter.
John, I just learned Banters of Williamsburg is closed today. We can't watch Chelsea Tots.
Oh, no.
At Banters.
We can do it on my phone.
You know.
What are you looking at during the show, Tom?
We'll do it on my phone.
I'm figuring out 3 o'clock this afternoon.
Not the show.
You can explain about negative rates.
Tom's hardly ever logged into the terminal.
That's
From
true.
New York, coming up, Neil Dutter of Renaissance Macro on this better economy.
Bruce Nabbit, thank you so much for joining us. What was the biggest thing you've learned about what a leader needs to be?
Well, it's really an emotional, or it's about being authentic, about believing in the path you're taking.
From New York City, things are looking better in the United States of America over the last couple of months, that's for sure. For our audience worldwide, live on Bloomberg TV and radio, here's the price action. Futures advancing just a little bit, up 0.1% on the S&P 500. A little bit of outperformance there on the NASDAQ, up by around about 1/3%. Steeper yield curve has been the story over the last couple of weeks. Let's get to it. Your bond market, 5s, 10s, 30s. Lisa mentioned this earlier. Your 5-year yield at around about 46 basis points. Your 30-year at 193. This is the steepest curve, the biggest spread between 5s and 30s, going all the way back to October 2015 now. And there's a reason why some of the banks, JP Morgan and elsewhere, are talking up the financials. The banks this week having a really big week in the equity market. Finish on this, the FX market. What a story we've had over the last 12 months. Do you remember people talking up Europe, the response to the vaccination rollout, COVID-19, how much better it would be in Europe, how much more efficient it would be in Europe? I was part of that conversation too. It's what people expected to happen in the summer of last year. It didn't. But one thing that went with that story was the idea that the dollar would underperform, that the global economy, that cycle would build, and it would be that classic trade, short the dollar. So many people were positioned for it, but here we are, a break of 120 on euro dollar, a clean break at 119.86. We come in 0.4%. A consensus trade is breaking down, and it's not just because of the vaccine rollout. The data in America is picking up, and picking up fast. We'll talk about that in just a moment. Let's get you some movers quickly. Here's Romain Bostic.
Yeah, John, when you talk about the biggest movers of the day here, Alibaba, of course, back in the news, getting a report out of Reuters saying that there's finally a little bit more consensus on what's going to happen with Ant Financial, potentially setting up the stage for Ant Group to actually go public. It might take a couple of years. Remember, Bloomberg had a report yesterday saying that Chinese regulators had finally come to some consensus as well. PayPal moving higher here in the morning. They reported earnings here, and they really just knocked it out of the park, adding more than 70 million active accounts last year, 16 million alone in the quarter. You're seeing a lot of the other fintech stocks rally here this morning, including Square. So keep an eye on that space. And Canada Goose out with earnings just here before the bell, 474 million in sales in the most recent quarter here. So they're selling a lot of coats here. I'm not exactly sure, you know, how you divide that and what that comes out to. That's Canadian. You convert that over. They're doing well. Flip up the board here and take a look at an interesting story that's been going on in the chip space. We had Qualcomm earnings come out. The earnings themselves weren't all that spectacular, but they gave an update here on this idea of this chip shortage. Basically, we've heard from automakers saying that they haven't really been able to get their hands on enough chips to basically continue production at the levels that they want to continue it. Qualcomm's new CEO said, this is a much broader issue. This goes beyond automotives. This really applies to everything. And they said it's going to be a while before folks manage to work through this glut. Remember, GM yesterday said they were going to idle 3 plants in North America, including one in Kansas here in the U.S. because they didn't have that. And then Aptiv, which Aptiv not here on the screen there, Aptiv, a software maker, also said that they're actually not going to be able to provide any guidance because they have no visibility right now on what the production schedules are going to be for the automotive sector. So something to keep an eye on here. Apple in the news as well. There was a report there out of CNBC saying that they finally have some plans here to partner with Kia on that Apple car that may come, or who knows, it may not come. 2024, I'm told.
Apple car.
Yeah.
Okay, Romain Bostic, thank you so much. John, I want to mention off of your data check there, JP Morgan up 35% off of the election of President Biden.
Yeah.
Just a remarkable moonshot.
And in the last week, Tom, in the last week, we've had a nice pickup in the banks on Wall Street as well, on the S&P 500. I think largely off the back of the move we've seen on the yield curve too.
Yeah.
But some of the banks out there on the south side pushing the story that we're not pricing in this reopening enough in the United States yet, Tom. And the data so far, it's early. I know it's only January data into February. The data so far does show an improvement in the last couple of weeks, and that improvement's important.
And you've also got almost a gloom cover trade. I know Lisa's familiar with that, where there's been so much gloom out there. You wonder about the elasticity as people catch up. Who they catch up to is Neil Dutta, without question, one of the most optimistic, persistent believers in the American economic experiment. Neil Dutta with Renaissance Macro is with us. Neil, just simply, do we underestimate the resilience and recovery ability of the American economy?
Well, that's what the consensus has been doing fairly consistently since the second week of April, Tom. And I think they're still doing it. I mean, if you look at your own Bloomberg News consensus of economists, the growth estimate for 2021 is around 5%. I think more folks are thinking that we're going to have a good year, and that's welcome. But I don't think enough have appropriately sort of priced in the right tail scenario. We're going to have a good year.
The persistency.
I think we're going to have a great year.
Right.
And I think that's what's important, and that's what the markets need to kind of get their collective heads around.
The persistency of 5%, and there's a great assumption that we noodle down to a potential GDP of 2, even under 2%. I get the sense, Neil, you disagree with that. What is your run rate of a post-pandemic American economy?
I mean, I think it's higher than 2. I mean, we had a lot of, productivity was starting to pick up. I mean, I think in many respects, I mean, the structural growth outlook for the U.S. is in some way cyclical. I mean, this idea of running an economy hot, utilizing as many resources as possible, making employers, essentially forcing employers via a tight labor market to kind of seek out additional efficiencies through their existing workforce. That was, I think, showing some promise pre-pandemic, and I think the Fed's going to try it again, Tom. And that's why, even in the face of stronger data, the Fed is unlikely to budge on their policy guidance. And I think that's obviously a bullish backdrop for equity markets, but I think more importantly, it's a bullish backdrop for the broader U.S. economy. Things like R&D spending are picking up.
Yeah.
Are you really going to be worried about secular stagnation in the U.S. at a time when our banking system is much better capitalized? You mentioned the outperformance in the banks. We're doing a lot of fiscal policy. And, I mean, the ingenuity is obvious. Did anyone think we were going to get a vaccine within a year? We did it. So I think that speaks to a lot of, the underlying growth dynamics and what's possible in the U.S.
Neil, you have been right.
You've
been absolutely right about this with your bullish call of the U.S. economy. And the gloom crew has been wrong. Yes, Tom. And I often find myself empathizing with them, not because I want to feel gloomy, but because a lot of people, including myself, want to see around corners. Okay. And the question is, what corner are we going to be looking at? Neil, what you're looking at right now is the potential for perhaps not overheating, but running hot. At what point does that force the market's hand? Perhaps the Fed doesn't move, but the market moves ahead of the Fed. At what point does it become too hot for equities to keep rallying, given where rates are right now versus where they could be?
I mean, real rates are negative 1%, Lisa. I mean, give me a call when they're at 0. We can talk maybe then. I mean, it seems. I still think the idea of interest rates breaking the back of the equity market is still a long ways away. And remember, I mean, the biggest risk to the U.S. fixed income market really is when Europe, frankly, is able to sort of reestablish its status, its growth status. And that hasn't happened, I mean, for a while. So I think the risk to U.S. Treasuries really builds when you have, broad-based participation in the global economy, and and when Europe kind of reestablishes its AAA status, and I don't think that that's really happened yet.
I think Neil needs to come on weekly just to provide Lisa some therapy and provide the bears out there. Don't you think, Tom?
Therapy? Does this count as therapy?
Just some bear therapy.
I think we're just we're Neil, on the edge of fair and balanced.
Neil, does he want to play in gloom therapy?
Come on every week. I'm sure he does that with his clients on a daily basis anyway. Neil, just quickly, on the economy, you mentioned just a couple of times that you don't think the market is quite picking up on this yet, or at least the economics community is not. When you sit around the table with the team at Renaissance Macro at the moment, where do you think the missed opportunity is as you see this economy snapping back, gearing up in the way that you expect?
Where where do I think the opportunity is? Well, I think, for me, I think, things that are tied to the reopening trade still have room to go. I mean, if you look at things like airlines, if you look at hotels, but again, I mean, I think it's interesting, you mentioned what are the two sectors that have been doing well since Election Day? Banks, energy. Who would have thought that with the sort of unified democratic government? Yep. It's one of these things where you have these sort of sell-side equity baskets, and they're just an entire waste of time. I mean, I have the defense sector in my Republican basket, and I have the banks in my Democrat, and I have the Republicans in my banks in the Republican basket. Obviously, it doesn't work because fundamental growth dynamics matter more. And what that's telling you basically is that growth is picking up. If you have stronger growth, you're going to need more energy. Hence, oil prices go up, and the Fed is like a carpenter hammering the front end of the yield curve, right? And at the same time, the growth dynamics are kind of pushing up the long end. That steepens the yield curve. That's good for banks. So, I think let's focus on the growth dynamics. Let's sort of keep kind of turn away from some of these sort of political arguments, and I think that'll lead you to much better investment outcomes.
Certainly over the last couple of months. Neil, great to catch up, sir, as always. Neil Dutter there of Renaissance Macro. Great example of that with the previous administration, Tom. Tesla. Was the previous administration a clean energy administration?
Well said.
Tesla to the moon. Not just me saying it. Lots of people have referenced it, Tom. It's just a great example of what Neil's talking about.
When we design this program, though, folks, it's really important on radio and TV you understand. That's what we live for. We make jokes about it, but the Duda-Abramowitz nexus there, John, is just profound. I mean, it's really important to create that conversational tension so we can realize how gloomy Lisa really is.
Wait, hold on a sec. I need to break in here to talk about gloom, okay? There is a question about being overly effervescent about markets and basically embracing the bullish narrative and trying to be somewhat cognizant of the risks still out there and, frankly, of the two-track economy and the longer-term consequences. I don't think that's just gloom. What's
we're just listening. We're listening. We're taking
I think it's an important thing to represent, to basically see what the risks are out there.
Are you finished? Do you have anything more
I've got lots more to say, but I'll let it go for right now.
John, 3, 2, 1. We do the surveillance. 3, 2, 1.
Really?
Very good.
That was good, Lisa. Thank you. We appreciate that. Coming up on the programme, Dr. Tammy Lundstrom, Trinity Health Chief Medical Officer. I'm looking forward to that. We'll see if Lisa pulls it together. Ahead of that, futures look all right, up 5 on the S&P. We advance about 0.1%. New York just looking beautiful.
Yes.
Isn't it just? Alongside Tom
Panthers
Keene.
in Brooklyn looks even better.
And Lisa Abramowitz. I'm Jonathan Ferro. You know what, Tom? You're the only person I've met in New York that's never made it to Brooklyn. Still.
I haven't made it below 59th Street, but that's a different story.
Honestly. You should take a hike in those boots he's wearing.
Really?
Exactly.
I'll walk with you.
Across the bridge.
We'll get a picture together.
I'm taking the L train.
We'll get a picture together. No, not on the subway, Tom. We're going to walk this. We'll walk this.
Oh, we are we?
We're going to walk this. From New York, this is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Biden is drawing a line in the sand on his coronavirus stimulus proposal. He's told House Democrats he will not back off his plan to send $1,400 checks to millions of Americans. The president says he is open to tightening the eligibility for the payments. Republicans have suggested that the checks be smaller and that fewer people get them. And this will be Janet Yellen's first public effort to address the turmoil involving GameStop shares and broker-dealer Robinhood. The Treasury Secretary meets today with financial regulators. One of those regulators, the SEC, has already said it's seeking to identify potential misconduct. It will also look at brokerages' decisions to halt buying. And Senator Amy Klobuchar is proposing a sweeping reform to antitrust laws. Her proposal would make it easier to stop mergers and acquisitions in court. Plus, it would target conduct by dominant companies that thwarts competition from rivals. Klobuchar is the incoming chairwoman of the Senate's Committee on Antitrust Law and Competition. McKinsey & Company has agreed to settle claims stemming from the opioid epidemic. Bloomberg's learned that the consulting firm will pay more than $550 million to end lawsuits by roughly 4 dozen states. The suits claim that McKinsey helped fuel the opioid crisis by providing marketing advice to drug makers. And more than 30% of US property owners are considered equity rich. That means their property is worth twice as much as the underlying mortgage. And according to Atom Data Solutions, the count of equity-rich properties rose to 17.8 million of the 59 million mortgaged homes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being in almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Need a starting material, all the material which is also produced globally. You know, the world is a global village, so to speak. And then certainly if you're missing certain parts and you can't get it out of a certain country because there are export restrictions or whatever, because they won't keep it for yourself, this is a bit where it certainly is a bit struggling.
It's a real worry for the medical community, for the healthcare community worldwide. Franz Werner Haas there, the CureVac CEO. From New York City this morning, good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Here's the equity market, quick snapshot for you. Doing nicely through much of this week so far. Slight pause yesterday. The S&P 500 up around about 1/10 of 1%, 0.16 percentage points into positive territory, up around about 6 or 7 points there. In the bond market, yields just about higher, 113, call it 114 on a US 10-year. That's spread between 5s and 30s, the widest since the back end of 2015. It is a steeper curve, supportive of the banks so far this week. We'll try and touch on that a little bit more a little bit later. We keep hitting on this one. Euro dollar 119.90, coming down 0.4%. Some real dollar strength, just asserting itself a bit more in G10, Tom, this morning.
A little bit of a good tape here, and of course all of this coming up to claims here, which we'll have for you in about 35 minutes, and then on to a jobs report, which is shaping up nicely for tomorrow. As you know, we've talked to a lot of fancy people in vaccines, people making vaccines, people at the cutting edge of scientific research. We also take great pride at Bloomberg Surveillance that we're talking to people operationally in the trenches. One of those is Tammy Lundstrom with Trinity Health of Michigan, with some 90 hospitals nationwide, and the operational reality of doing the vaccine. We're thrilled that Dr. Lundstrom could join us this morning. Tammy, I want to start with the pure medicine. Do you have a confidence that we can correctly execute right now a 2-dose strategy?
I am definitely confident that we can do that, and within Trinity Health, we've been doing that. We've ramped up, and we're delivering over 90% of shots in arms every 7 days compared to the vaccine that we get delivered to us. So we have ramped up and we're ready to go.
I can't emphasize enough, folks, this is the cutting edge of what we're all talking about. Dr. Lundstrom, with that said, when do we see the migration down to younger and younger people?
Probably somewhere around the late April to May timeframe. It's very heartening that J&J is ready to submit their FDA EUA approval. We're very excited to have more in our armamentarium than the 2 vaccines that we have, and we're anxious to get more supplies so we can get people protected.
Dr. Lundstrom, the U.S. is doing a lot better than a lot of nations. Canada and the European continent come to mind in the forefront. Are they going quickly enough to get ahead of the new strain of COVID that has emerged in the United Kingdom, that has emerged in South Africa?
Well, I think we can always go faster, and I think we're all committed to trying to get shots in arms as quickly as possible. We can't forget, though, that we still have to mask, we still have to physical distance, we still have to wash our hands, avoid crowds. So it's really a bundle of activities that we really have to double down on while we're trying to get shots in arms quickly.
Talking about getting shots in arms, a lot of people are talking anecdotally about how the vaccine has to be defrosted. And then if all the people don't show up to their scheduled appointments who are eligible currently, they discard the remaining vaccine. How much are you seeing that, and what can we do to avoid some of this waste?
Well, we are actually not doing that. We're creating waiting lists so that we have people and places that we can get the vaccine to quickly within a few minutes after knowing that we have excess doses. And we're also looking at using those excess doses to vaccinate inpatients in the hospital as they're discharged so that we don't waste a single dose.
How much discretion do you have around making those decisions, Doctor?
It's very difficult right now because it's a state-by-state decision of what the prioritization lists are. So we're following state by state, and our waiting lists keep in mind of who's on the priority list per state, and we are following those guidelines. So we are keeping our waiting lists ready to go, and as states open up to more populations, we expand the list.
Would you find it helpful to get that flexibility, to have that extra discretion yourself?
I think that we've been able to manage through the difficulties of various state regulations and requirements of who's going first, and then keep our lists accordingly. We care for about 1 to 1.5% of all patients in the U.S., so we've got a lot of patients eager to get the vaccine. So that is a very good news, but also heartbreaking because we can't get supply fast enough.
Well, that's the point I wanted to bring up, Tammy. If we have Washington legislation, and with the scale of Trinity, folks, 90-plus hospitals, multi-billion-dollar revenue stream with all those expenses as well, you get a check for, say, $10 million from Washington. What's your greatest need at Trinity right now with money from the government?
I would say our greatest need right now is the vaccine supply, and then followed by staffing. We know that staffing is very precious, difficult. Colleagues are tired, so really getting some supplemental staffing to help us not only balance the 1,200 or more patients with COVID-19 that we have in our hospitals today, people that are coming to us for emergency care and heart attacks and strokes, but also getting the vaccine clinics up and running and partnering with public health in our communities to really try to get a collective mass vaccination sites and move to getting shots in arms as quickly as possible.
Doctor, thank you. And thank you so much on behalf of us all for the hard work you're doing at the moment. We appreciate it. Please come back soon. Dr. Tammy Lundstrom there of Trinity Health. Tom, some of the latest numbers for you. 35 million doses have been given in the United States. I think our average daily rate last week was 1.34 million. We need to try and keep up that pace, hopefully increase it, but that's going to come down to supply and whether we hit any roadblocks, some obstacles down the road.
We've come a long way in a month and a half, John, that 1 million or whatever per day. It just adds up. And as you heard, Dr. Lundstrom goes out to April where we really start to click into the American population.
When does the pressure start to build, Lisa? When does the pressure start to build on policymakers across this country to pare back some of these restrictions once you get the most at-risk in society vaccinated?
Well, you're already seeing a lot of people say that we can't go into another lockdown, and there's sort of this tension right now as those new strains come up.
Yeah.
And people say that they're going to spread in the U.S. Like wildfire, the way that they did in the United Kingdom. I also think it's interesting going back to what you were talking about, John, with travel, which is how quickly can we get travel back up and running with this dissonance with the U.S. so far ahead of, say, Canada?
Yeah, this tension, this dynamic, I think is really, really interesting. The vaccination programs in the United States, the UK, decent, but the sequencing to reopen these economies is shifting somewhat. Tom, it's interesting to me that the UK is making travel more restrictive, not less.
Yeah, well,
in the coming months.
Each country, that's a good point. Each country is different as well. I mean, you know, again, rolling it out. Right now, I would say the UK really impressive.
Up 7 on the S&P this morning. Good morning to all. We advanced 0.2%. Coming up shortly, Sebastian Page of T. Rowe Price, the head of Global Multi-Asset. From New York City, heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Animals across the globe are dying by alarming rates. A report by World Wildlife Fund and the Zoological Society of London found that populations of mammals, birds, amphibians, reptiles, and fish fell by 68% in the last 50 years. In the tropical Americas, the rate was worse, with a 94% decline in the same period, and the size of observed wildlife populations in or near freshwater globally have fallen by 84%. Continued human abuse of the planet may lead to the collapse of the systems and resources that allow global civilization to persist in the first place. Overfishing and hunting, invasive species, pollution, habitat loss, and climate change are the main causes of this animal population crash. The report compiles evidence from 4,392 different vertebrate species and concludes the evidence for humanity's destruction of biodiversity is unequivocal. Using powerful computer models to simulate policy that stops biodiversity loss, scientists have explored scenarios to slow the trend. Such measures would include expanded conservation, increasing agricultural yields while also eliminating food waste, and cutting the global meat intake in half. By changing what the world eats and how it produces that food, nations could stop this tragic loss of life by almost 50%.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Friday is Jobs Day on Bloomberg Television. The first look at jobs in 2021 and what it means for a new U.S. relief package. The January Jobs Report, Friday at 8:30 on Bloomberg Surveillance.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Periods of excess credit, liquidity, and boundless enthusiasm, there will be many bubbles forming in markets.
The system is, from a financial stability perspective, still is robust.
We haven't seen signals that these trades will spark any systemic risk.
The world doesn't shift just because you're buying shares online.
Markets are rewarding places with vaccination and normalization strategies.
There are a lot of people who can't go back to work.
The virus dictated the downturn, and it will dictate the pace and the shape of the recovery.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene, simulcast Bloomberg Radio and Bloomberg Television across this nation and worldwide. And it is an optimistic tone to the markets. And, John, I'm not going to mince words. It's subtle, but this is a market that refuses to go down. In the last hour, we've had a nice, gentle lift up, again, a bid to stocks.
Equity market up by about 0.2% on the S&P 500, Tom, advancing 8 points. But it's been a decent week after a big week of losses last week, a snapback that's backed up, let's face it, by better earnings,
right.
1, the pandemic progress, 2, on the vaccination front, and better economic data, 3, ahead of payrolls tomorrow morning, and initial jobless claims, Tom, about 30 minutes away.
Well, we're going to see claims here, and that's after that good ADP report yesterday. And Lisa, within the gloom of the reality for a part of the American labor economy, we see non-farm payrolls go 50, 70, and now the survey's 100,000.
Yeah, and I think that the biggest actually data point from yesterday, John was mentioning this earlier, the ISM services numbers, the employment figures there that came in well better than expected, the highest levels, the biggest gain since February of last year. And it raises a question, Tom, of whether we're getting perhaps an acceleration, even in some of the hardest hit areas of the economy, even before we lift up some of the restrictions that we've seen from the COVID crisis.
To the two of you, John, let's start with you. What is your signal, John, from the bond market?
From the bond market right now, steeper curve, and I think that Neil Dutter absolutely nailed it. There's an elephant sitting on the front end of the curve. It's the Federal Reserve. That 2-year yield's going to do nothing. It's all going to be at the back end. That's all going to be driven by not by just supply, but by what supply will achieve. Higher growth, maybe better inflation numbers as well, and better economic data, full stop. And I think, Tom, over the last week, we're starting to see that just a little bit. Once again, underestimating the United States' ability in this economy to reopen and snap back faster. And we're seeing some evidence of that again.
And for those of you that slide into surveillance here at 8 o'clock, you've got to get up earlier so you can enjoy the Dutter-Abramowitz nexus we experienced in the last hour. Lisa, on the bond market.
Tom, I will just add on the credit side, you're seeing the same enthusiasm for the recovery trade. The idea, Apple is selling debt at nothing, right? I mean, they're able to sell 40-year bonds basically cheaply because why not? But there's a question of whether safety is actually the risk right now. The idea that investment-grade bonds that are considered safer have actually lost 1.6% so far this year, while junk bonds have gained nearly 1%, and you see inflows continuing into this debt. The idea that we have somehow foregone the default cycle and started anew, Tom.
One final question. Our guest is so important. I want to get to it. John, I'm looking at lesser, worse negative rates in Europe. I look at the Swiss 20 as a barometer, and it's done better. It is a lesser negative number. John, do you see a final relief to better negative numbers in Europe?
No, unfortunately not, Tom. Unfortunately not. I don't think the policy rate at the S&B, at the ECB is going anywhere anytime soon. We are so early in a recovery. Let's face it, Tom, hasn't even started. And I think there's some real doubts amongst the economics community as to whether you can even engineer a recovery in places like Europe that will lead to higher rates. Europe's looking a lot like Japan did 10, 20 years ago.
It is Bloomberg Surveillance on radio and television. You didn't know this, folks, but when we put together this show and all we've got coming for 2021, we were going to call it Nerd Police. But that got voted out. You know, it got voted out. And the reason is we've got to remember the basics of investing. We can do that with Sebastian Page of T. Rowe Price. Yeah, he's a geek and he does cross-asset, multi-asset and all that. But the reality is his book, Beyond Diversification, is absolutely critical. It's the #1 mistake people make with their investing portfolios, amateurs and pros every day. Sebastian, I'm honored to ask this question. What have you learned about Beyond Diversification when you look at GameStop and the madness of the last 6 weeks?
Well, you know, I've been thinking about your Dutta versus Abramowitz nexus. And I'd like to take a shot at reconciling that. I think as an industry right now, we're conflating two things, and they're hard to separate. But we're conflating the effects of liquidity with investor sentiment. And we're talking a lot about froth, and froth can lead to the failure of diversification when bubbles pop. But what is really creating the froth? We look at over 25 indicators of investor sentiment, and some of them don't show exuberance whatsoever. Cash holdings in equity mutual funds, top 10% of the last 10 years. Lots of cash being held in equity mutual funds. Equity fund flows are negative. People are pulling money out of equities. And if you look at individual investors, because we often blame, I think it's a mistake, but we often blame individual investors for froth in the markets. Well, the surveys of individual investors, when you ask them, are you bullish on the stock market for the next 6 months, or are you bearish on the stock market? The spread between the people who are bullish and the people who are bearish on the Lisa Abramowitz side, perhaps, I don't want to get into the debate here, but
carry on, Sebastian. This is good.
That spread is about 8%. So there's 8% more individual investors who are bullish over the next 6 months. It's not that high. It's actually close to historical data. Same for institutional investors. If you look at investor behavior indicators and you look at our institutional investors really positioned risk on in their portfolios. We're neutral between stocks and bonds, for example, and you get something that's closer to neutral. So why all the froth? And this is where we start conflating liquidity and investor sentiment. I don't know exactly, right? But we've had a 30% jump in M1 money supply, 25 trillion in global monetary and fiscal stimulus. You know, I would say that a lot of the froth and the localized bubbles are created just by this flood of liquidity, perhaps a bit more than investor exuberance per se. So this is me taking a shot at reconciling the nexus here.
With decent effort, you can come back and try again. That's the analysis. Let's get to the advice. Just a simple one, Sebastian. What do you do?
You know, right now, you would think stocks are expensive on an absolute basis for sure. And you talk a lot about this on your show, not necessarily on a relative basis, especially if you look at global stocks relative to bonds. We're asset allocators. We want to be invested for the long term. We end up neutral between stocks and bonds. However, our time horizon is 6 to 12 months to 18 months. And it's clear, and you were talking about vaccination a few minutes ago, it's clear that the destination for this year is COVID off. And the news on the vaccines have been really positive developments. It's a race against the mutations, but we're moving towards COVID off. So as an investor, ask yourself, what is the world going to look like in 12 months? And there is 1 trillion in excess personal disposable income. It's not equal, it's K-shaped, but there is pent-up demand in the economy for sure. So while we're positioning our portfolios neutral between stocks and bonds, we're taking advantage of relative valuation opportunities under the hood. We're long small caps. We're adding to credit. We're favoring bank loans over high yield. For the first time a couple months ago in about 10 years, we've tilted positive tactically towards value versus growth. We still think you need to hold both styles, but broadly speaking, Jonathan, it's neutral on a kind of broad risk on risk off basis. Yeah. Take advantage of the recovery trade under the hood. That's how we're positioned right now.
Sebastian, a lot there. I have to go to your attempt to resolve the nexus, the Abrama nexus, which you did a great job talking about liquidity versus sentiment. But this dance is an uncomfortable dance, with liquidity driving market action and sentiment catching up. If sentiment catches up and people take that cash and they put it to work, whether it's in buying a trip, a plane ticket, or whether it's buying the next GameStop item, there is a question of whether that causes the liquidity to go away, right? This talks about the Fed dilemma. And at what point does liquidity drive markets more than sentiment? In other words, are we getting to a point where we could see sentiment being actually a bearish indicator if it turns too positive?
Absolutely. And, you know, the rate of change in liquidity has to go down. We just can't sustain 30% year-over-year jumps, and sentiment is improving. And if it improves too much without earnings sustaining market returns, you get in a very fragile situation. I think the key is to look at the usual, and this is an unprecedented environment. I promised myself I wouldn't say unprecedented because everyone says it, but it is. But the usual playbook for coming out of a recession, it's not at this stage in the recovery, it's not PE expansion. It's earnings recovery. And we're looking at plus 20% expected for 2021 on the S&P 500. So, Lisa, the way this fragility goes away is if earnings in 2021 deliver, if companies deliver on earnings, fundamentals increase. You could end up in a year where stock returns are maybe flat, maybe slightly down, but the average stock is up, because you get a broadening of the markets. Yep. Another way of describing the recovery trade, but that has to be sustained by earnings. Right now, financials look pretty strong, and you're talking about the steepening of the yield curve. Our analysts are upgrading financials, and tech is doing quite well. They continue to generate massive cash flows, accelerated digitization. So we can get out of it, but we need fundamentals to pick up over valuation.
What a happy diplomatic conversation. Sebastian, thank you. Come back soon. Sebastian Page, T. Rowe Price, Head of Multi-Asset Strategy. The market right now up 8 points on the S&P 500, advancing 0.2%. Tom Keene, in about 19 minutes' time, initial jobless claims in the United States of America. Claims, your estimate, 830,000. The previous read, 847. Tom, considering when we were 12 months ago, still in the wrong place.
That's the one statistic that sticks out. ADP good, and of course the tone on the jobs report. 1 month's data is actually pretty good, but you're right, John. Claims just has not broken in. Futures up 8, down futures up 26. John, there's a lift to the tape.
There is. A marginal one, up 0.2% of the S&P. Coming up on the programme, Republican Congressman from Kentucky, Andy Barr from New York. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. President Biden is vowing that he will not retreat on sending out $1,400 checks as part of a stimulus package. The president told House Democrats he is willing to tighten the eligibility for the payment. Republicans have suggested making the checks smaller and sending them to fewer people. And this will be Janet Yellen's first public effort to address the turmoil involving GameStop shares and broker-dealer Robinhood. The Treasury Secretary meets today with financial regulators. Yellen spoke this morning to ABC News.
We need to understand deeply what happened before we go to action, but certainly we're looking carefully at these events. We really need to make sure that our financial markets are functioning properly, efficiently, and that investors are protected.
One of those regulators Yellen is meeting with, the SEC, has already said it's seeking to identify potential misconduct. And House Republicans have voted to keep Wyoming Representative Liz Cheney in her leadership role. They turned back an effort to remove her from...
I'm placing an order to sell, to stop and sell euro at 119.93.2. So stop on profit for 119.93.
This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
What I think a mistake would be is if we take this opportunity and it's used to foist more regulation on those that want greater access. I think that's directionally not the way of the world, not the way of the economy, not the way of technology. So I think we're going to have it's really an open question directionally what comes out of this hearing.
Congressman Patrick McHenry there, the House Financial Services Committee ranking member from New York City this morning. Good morning. Alongside Tom Keane and Lisa Abramowitz, I'm Jonathan Ferro. Counting you down to the opening bell, about 1 hour and 12 minutes away. Futures with a lift, the equity market pushing higher, up 9 points on the S&P. We advance a little more than a 1/4%, or there and thereabouts, up 1/4%. In the FX market, euro dollar a break of 120 briefly. We're creeping back up to that level now at 119.96. And in the bond market, 114.27 is your yield, Tom Keane, on a US 10-year, 1.1427%.
An optimistic tilt, and again, a bit up through the morning here on equities. Right now, full disclosure, folks, long ago and far away, there was a set of repeated grandfathers that were called Henry Clay Keene. And if you go to Henry Clay High School in Lexington, Kentucky, you have an interior knowledge of the Whigs, their success, and their failure in the 19th century. Andy Barr joins us now. He is a member of the GOP, which is what you are in Kentucky, and joins us from the 6th Congressional District and from the capital of this nation. Andy, you more qualified than Mitch McConnell to talk about this trap of your GOP going the way of the Whigs. What do the Republicans do to not repeat Henry Clay's history?
Well, that's a great question, and obviously there is some soul searching. Anytime you lose a presidential election, a party should do that. We're doing that, and I think we've come to a good place as of last night with our meeting to make sure people understand the Republican Party is a big tent, diverse party. We have a small number of colleagues who voted to impeach the president, a large number of members who voted against impeaching the president. But we recognize that we need to attract a lot of people to the Republican Party because we're the party of free enterprise and limited government. And as you see from this president, it's a very different story.
We have a president preaching bipartisanship. Is your party too frugal? Are the Republicans too austere for 2022?
No, not at all. In fact, some would argue we're not fiscally responsible enough given the $4 trillion that we borrowed last year in response to the pandemic. But the truth of the matter is we have over $1 trillion in unspent stimulus funds left, and we're rushing to borrow another $2 trillion. That's why you're not seeing a lot of bipartisanship. Unfortunately, the president is not working with Republicans. They're using a budget procedure to ram through this $2 trillion in
Oh, come on. You guys used the same procedure. Stop it.
Well, we did.
You did the same procedure last time around.
We certainly did, and there's nothing inherently wrong with using the procedure, but if you want to be bipartisan about it, you don't use that procedure, frankly. And this president has said that he wants to be bipartisan, but when he had the opportunity to do it, he's obviously turned away from that.
Congressman, we've got to get through a lot of topics, not just stimulus, but also on regulation. I understand you're on the House Subcommittee on Oversight and Investigations as well. Given the events in the last couple of weeks in financial markets, leading the administration is Secretary Yellen. Do you think she needs to recuse herself from this?
Well, I don't know if she needs to recuse herself, but what I want to see from Secretary Yellen is a little bit of caution and deliberation and not a lot of overreaction to this. The broader markets are doing just fine. Obviously, there was volatility with respect to Reddit-fueled trades on GameStop and other AMC and other equities. But that's actually as a result of the advent of zero-cost trading and the democratization of access to the capital markets. That's not a bad thing. And I think what you're seeing is the market's actually functioning fairly well with market discipline setting in, both with the hedge funds who are learning a lot about zero-cost trading and the influx of day trading and what that means for their short positions. It means that short squeezes are very possible. And I think there's market discipline that will set in with these hedge funds and professional Wall Street professionals. On the other hand, I think a lot of the day traders and the small investors are learning about capitalism, learning that fundamentals matter, learning that earnings and valuation matter, and that on the down.
Well, we closed position on euro, as you can see, just right here. So well done, guys. You placed an order, you made trade, and was successfully executed. So well done. Let's see how long it took you to make profit. Around 10 to 12 we purchased, and a couple of hours It all depends, yes, again, on your spread and how much broker pays you per pip. So in our case, we have £100 per pip, 2 pips, £100. Okay, well done.
I think there will be some questions about social media. There's questions about social media all the way around, both in terms of financial marketplaces, but also in the marketplace of ideas. And that's always appropriate for us to look at social media, the role of social media. But I think the more information generally, the better. People need to understand the sources of that information. But at the end of the day, I believe that democratization of access to capital, the advent of low-cost, no-cost trading platforms, and more